Before we get started, I want to be clear. Everything on this channel is for educational and personal growth purposes only. Nothing here should be considered financial advice.
The VIX just dropped below 20. Rate cuts are starting to be priced in. So, what does this actually mean for the stock market? If you are investing in the stock market right now, this matters because shifts in volatility and rate cuts being priced in directly impact how you should be positioning your portfolio. My name is Garrett. I'm a finance major at WSU and an active stock and ETF trader. I started my first portfolio about a year ago and made it my goal to grow that portfolio to 7 figures. If you do want to follow me on my 7 figure journey, the wins, losses, and decisions, make sure you hit that subscribe button. I also post short form content on my Instagram channel. If you want to show additional support, please go follow it. In today's video, I will be discussing my performance in the month of April so far, the VIX, and futuristic expectations for interest rate cuts. First, my realized gain loss. Now, I like to include my realized gain loss on my YouTube channel for transparency purposes. So far in the month of April, we have $378 in realized gains and $0 in realized losses. Some of my most notable wins are 2 shares of WDC with an ROI around 15.5%, and 4 shares of GOW with an ROI around 22%. Small, consistent wins like these build up over time. Now, with my investing strategy, I typically don't like to sell my entire position all in one go. What I like to do is invest in high quality stocks, and when those stocks are at a profit, I like to sell shares in order to meet my VIX allocations. Second, the VIX. The volatility index is currently priced at $19.22. It finally dropped below $20. Now, this signals there is still slight fear in the market, but it's obviously a lot better than we were a few weeks ago when there was extreme fear in the market. That being said, according to my VIX allocations, anywhere between 20 and 25% of my portfolio should be in cash, and 75 to 80% of my portfolio should be invested. Now, I am currently shy around 14% in cash and 86% invested. Now, I really do want to be closer to my VIX allocations, so early on next week, I fully intend on selling some of my stocks at a profit in order to get a little bit closer to those VIX allocations. Third, let's discuss interest rate cuts. Now, I use the FedWatch tool in order to conclude whether I'm long-term bullish or bearish on the stock market. As investors, we want to see interest rate cuts being priced in because essentially that allows businesses and consumers to borrow money at cheaper rates. Therefore, they have more money to invest in the stock market, real estate, etc. So when you take a look at the FedWatch tool, a rate cut is being priced in June of 2027, which is bullish news. Now, if we were to go back a few months ago, 2 rate cuts were being priced in 2026. But if you were to go back, let's say 2 weeks ago, actually rate hikes were being priced in, which is very bearish. So overall, a rate cut being priced in June of 2027 is very bullish. Although I can foresee in the near future, that rate cut may be being priced in closer to January of 2027 or possibly February. But in order for that to happen, we really need gas to descend. In conclusion, right now we are seeing 2 very important things: a declining volatility index and rate cuts being priced in. Together, this makes me a lot more optimistic about the future of the stock market. Now, we have had a very rough start of 2026, but with a 2-week suspension of attacks on Iran, a decreasing volatility index, and rate cuts being priced in, this indicates that, I am bullish long term and short term on the market. I hope each and every one of you have a good rest of your day. Thank you.